Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.24% here. Market is actually still open as I record this video. Market should be open another minute and 35, 34, 33 seconds there now. So let's get into it here and figure out what we can expect going into remainder of this week. We got today's Thursday already, right? So we have another day of trading for this week here. This is looks like it's gonna be pretty much we have another day for the month of August, which is 31st on Monday, and we'll be getting into the new month going into Tuesday, which is gonna be a new trading month, which is gonna be September on Tuesday. And looks like, we'll probably let's look at some of those monthly charts on tomorrow's video, the weekend video, right? It's not always Friday night. Sometimes I'll do them Saturday. It will be Friday night or Saturday afternoon or sometime, but we'll check out some of the monthly charts actually over the weekend video, the market update. But today, let's stick with my 65-minute chart analysis. Go from there. So it looks like as we have about 26 seconds remaining, we are seeing some kind of continuation pattern here, potentially some sort of bull pennant, some kind of a bull flagging pattern. I'm not sure, but market has been grinding in this way for entire month of August, and it's not giving anything for this entire week. Market has been pretty much continuing to march higher. And obviously, benefit of the doubt continues to continues to go to the buyers, obviously. But I think we're kind of getting into that point where market just closed. Looks like we are positive with the 0.22% there. Looks like transport did a little better, right? The VIXs are up. Well, these VIXs is a little bit lagging, but VIXs are up. The real-time quotes on these VIXs are, I think, like they're 15-minute lagging, but you can see on VXX, they're up quite a bit at some point, but we've been seeing some strange things here in the last couple of days where VIX been, moving sideways or positive while the S&P continues to move higher. But as I tweeted out earlier today, I think we're starting to get into that level where you're gonna start to be more fearful in the market, right? Because people are starting to get greedy at these levels, and market is conditioning complacency throughout this market. You wanted to be greedy back in March lows and April when everybody was fearful, right? And now that everybody's greedy, this is the time to start being fearful. And that doesn't mean you just go all out with shorts. That's not what it means. Market is up. We're in an uptrend. We may or may not suffer 10% or 12% corrections. We don't know when that's going to come about. So many people thought that 10% should be coming about, I don't know, this month, maybe a couple of weeks ago, maybe a month ago, maybe in July, maybe June. So you see what I'm saying? Calling the top is always the most difficult endeavor. It's actually easier to call bottom within an uptrend than calling the top. So what you do is, when the markets start moving up like this, you can always start closing out some of your positions that have yielded great gains, and always hold some also, just so that if the market continues to move higher, you can continue to be part of it. So you don't always feel like you're left out, you're missing out. As I said yesterday, it's okay to have a couple hedges here and there, nothing crazy. Hedges are there so that if something were to go wrong, let's say we see some steep decline or something like that. Let's say if this thing does come down from here to all the way to my midterm moving average, that's only 3% decline, which is nothing, right? So, you could have a couple hedges there. That way, if we do see some sharp, abrupt decline, maybe you can use that funds to maybe buy more long-term shares or something like that. But trying to profit, trying to time this, or you're trying to make some big jackpot winning trade, you know, you got so inspired watching that movie over and over again, that Big Short, and that, you know what I mean? It's gonna be detrimental, especially if we're just coming out making new all-time highs here, right? So this is the time where it's gonna take high degree of risk management, right? A mastery of risk management. Unless of course, if you're just always having a couple of holdings here and there, you're in and out, then no. But like I said before, I always have a very, very long-term position. I got the, you know, pretty long-term position. I got a position trading setups, and then I got a shorter-term, more aggressive ones. And then when I see the market gets extended like this, I start to get rid of those aggressive longs. We're talking call options. We're talking leverage ETFs. We're also talking stocks that has gone up straight up, like Apple, Square, Lowe's, things like that, right? I also own bank stocks. I haven't closed out any of the bank stocks. You know, I've been holding those, including like I also have some, transport stocks like FedEx, UPS. I haven't closed out any of them either, right? So this is a time to where you start managing risk, understand which ones to get rid of, which ones to hold. Again, maybe this is time to maybe have a couple hedges that you're okay to, lose everything on. That's what hedges. You're hedging against your longs. That way, when we do see a sharp decline, you're going to have some cushion so that you could potentially have those hedges kick in and have some money to possibly maybe, benefit something on that move. And at the same time, kind of protecting. And you're not going to have to protect your entire longs, right? But at least we'll have that some cushion on the next downturn. If you are set up as a long-term investor, right? And if you're set up as you have your portfolio is built and you're in it for long-term, you closed out a lot of your aggressive longs, but you're still holding many long-term longs, and you want to kind of protect that or have some cushion, or you want to have some liquidity where, you get into some, maybe some VIX calls or something like that, some hedges. That way, if something were to happen, you can use that and you can benefit from them, potentially move. But at the same time, know that if you do put hedges, and if the market decided that it's just going to move sideways for months and it's going to correct through time, you should be okay with completely losing, because that's insurance. Insurance means if you didn't use it, you lose it, right? Kind of like your car insurance. You didn't get a car accident. Well, what happened to all your premium? It's gone. It's gone. It's there for a protection. Anyway, so there aren't so much I can talk about as far as the technicals, fundamentals is concerned at this point. It's mostly psychological. And right now is the time where you want to learn. You want to be trying to figure out how you want to deal with this market, managing risk, adjusting your portfolio, and keeping in mind all possible scenario, because none of us know what's going to happen. This market just exposed everyone. In the last several months, this market just exposed entire world. I'm talking everyone, including myself, that none of us knows where the top is. None of us know when that thing is going to see a pullback. None of us even knows, it fooled 90% of retail traders just in the last 4 months. There's no way. Just think about what happened in March and April. Most people thought it's impossible with this kind of economy, with this kind of pandemic. It is impossible with the lockdown. It is impossible this market to V-shape higher, make new all-time highs within this year. Most people did not approve of that, right? So this market already fooled the majority. So it will be foolish to trying to figure out when that top is going to be. You just have to understand all possibility and manage risk based on the probability, right? Because again, market can correct through time. or market can correct their price, or market can keep grinding higher. So it's kind of catching up to my short-term moving average there, but it's not a whole. Let's check out that oscillator. Oscillator is kind of pulling back a little bit. We've seen that here before. We saw that. So here, let's zoom out a little bit. We saw that here, didn't do anything. 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 We're seeing it here. You know what I'm saying? So we're still on top of his span, have not gone down back to the bottom of his span. And I talked about yesterday that first signal, at least very early signal for this extended market to at least see some kind of pullback, at least first early signal, doesn't mean it's a confirmation, but early signal will be this thing at least dropping below this support, letting us all know that we're no longer in this phase anymore, in this, high RPM, shifting gears on a 4, 5, 6 gear. We're not that anymore, right? That will be the first signal. We don't have that. Who knows if this thing comes down, finds support again. Who knows, maybe this thing will come back right about here. You see this one right here, right about here, and just goes right back up. And it's keep on creating space for itself to prop itself back up. We don't know that. None of us do. This market just exposed all of us, right? None of us knows where this market is going. So if we don't know, what do? We manage risk. We manage risk. You don't ever chase, right? Because the market punishes the chasers and rewards the risk takers. So right now is to account for all possibility. Potentially a big drawdown, potentially sideways, potentially keep going higher. All three scenarios, and managing risk and preparing your portfolio to accommodate this current market condition. I'll come back for you guys tomorrow night, look at some monthly charts on all these indices. We might get some good ideas about that, and we'll go from there. Enjoy your evening. Good luck trading tomorrow.